Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So recently I got a few questions from quite a few people, but basically asking me privately what I think about J&J, especially with what's going on with the legal situation, the latest earnings report, the fact that they're doing splitting their healthcare company. So like they now have another company called Kenview. So basically just a few people have asked me questions. So what I want to do is I just want to give you a quick overview of what my plans are going forward for this company, as well as tell you exactly what has been happening and give you the financials. So recently the company have reported, and I think this is really worth looking at. If you invested in this company or you're interested, you need to look at the latest earnings report, which was basically a couple of days ago. As you can see here, in terms of sales is up about 6%, or just slightly over 6%. In terms of EPS is actually up about 8%. You can learn a lot from this type of information the company provides, and by also listening to the earnings call, which is quite actually important. I have listened to half of it. It's quite a long one, but I need to finish that off as soon as I can. But there was not, I read the transcript, which is basically slightly easier because you can search for things that you're looking for specifically once the transcript, and you can find all that information on the company website. It's not like a secret data, whatever. Okay, so there's a lot of information, but looking at the quarter 2023, second quarter 2023 sales, you can see here, this is 2022 and Q2 2022. Basically you're comparing it to this time last year, and this is the change basically. So for US you can see it's almost 10% up, which is absolutely amazing. For international it's about 2% up, and worldwide it's about 63% basically, 6.3%. I wish it was 63. Okay, Europe you can see it was down, but everything else was basically up. And this is one of the reasons I actually invest in this company. It's not just based in the US, it's based all around the world. Their products actually, this is one of the ways I like to play this company, Unilever, Procter & Gamble. This is how I play in terms of like emerging markets and the worldwide kind of thing. This is the reasons why I own some of these companies. Not the only reason, but one of the reasons. And you can see from sales, 25.5 billion this quarter. This time last year was 24 billion, so it's absolutely growing. It's about 6%. And so GAAP earnings, for example, is growing. EPS is actually, GAAP EPS is actually growing. Adjusted EPS too as well. Everything basically is heading in the right direction, which is basically what you want to see from this type of company. The other thing you can also look at is where they get their sales, so the key drivers of operational performance. So you can look at, for example, immunology. You can actually see the types of drugs that they have. I have no idea what some of these drugs are. I know the COVID ones, okay, but the rest of them, and this one is the one that actually, look, it says here revenue decline, okay, which is basically expected, right? But you can look at the neurology, you can oncology, and so on, cardiovascular. They have loads of different types of products that you can look at. I don't work in a hospital, so I can't actually say I know exactly what these products are, like how much demand and all of that stuff. I don't know, but based on what the company is reporting, it actually looks basically decent, basically sales from looking at these numbers that were in front of us. Now, so there are a lot of information that you can find through here. So what I'm going to do now is I'm going to talk about the financials of the company from Sharia compliance side as well. Then I'm going to show you the legal side of things. Okay, so that's exactly what we're going to do, because the legals are very much concerned for a lot of us. Okay, and we need to make sure that we are comfortable with that before we start investing in this company. Okay, right. So like I said to you, the company is J&J, currently trading $170 per share. Basically EPS, 5-year return basically for this company is 34, let's call it about 35% in the last 5 years. EPS $4.93, market cap of $442 billion. Okay, so this is a huge company. It's not a small company by any chance. It has a wide economic moat, and it has a beta of 0.55, which is basically what we want. That means company is not that volatile. Now, PE seems very expensive right now, but forward PE is actually quite low, and 5-year growth average PE is actually 6.8. I'm not even sure if that's actually true. Yahoo Finance sometimes can throw this data out of blue, but so this is where I use a formula to basically get this data from Yahoo Finance. So sometimes it can be all of it, but the 34 seems a little bit too much. But when you look at the sector, 28, Okay, I wouldn't be surprised. Okay, and the fact that the company has gone up quite a bit in the last few weeks. But forward PE is going to be, in fact, I'm going to double check this. I'm not comfortable with this. And it is actually true when you look at the J&J. So Y Charts is one of the websites I do trust, and it's 35. So it is possible he's trading about that much right now. But when you look at the 5-year average, is actually quite low. Okay, so that tells me it might be expensive right now. Price to free cash. By the way, PE does not tell us the full story. You always have to look at the other metrics as well. Price to free cash flow right now is about 27, and PEG ratio just basically above 1, basically 1.5. So that tells me maybe a little bit expensive. Remember, we're looking for PEG ratio below 1, and that's undervalued. Just above 1 is okay. Anything above 2 is kind of expensive. Annual dividend yield of 2.8, payout ratio only 44%, and latest increase were 5.3. 5-year growth rate of 6%, 60 years of increase in that dividend. Annual payout, you get about $4.76. Dividend safety of 99%, which is basically the highest any company can get. Free cash flow, right now we're looking at about $16.21 billion. So they've got a lot of money in the bank. They can do a lot of things with that. Remember, they can buy back their own shares. They can actually reinvest in the business. They pay off any debt that they have. They can increase that dividend. Okay, they can do so much with that money. So free cash flow is very, very important to us as investors, and basically very important to the company, because any company doesn't have any free cash flow will definitely go bankrupt or struggle doing business, basically. Okay, they might not go bankrupt, but they might not be able to sustain it for a very long time. Free cash flow yield, we're looking at about 3.7. Normally we're looking at about 3%, but 3.7 is really good. Free cash flow margin of 14%. Normally we're looking at about 5%, which is really good. Profit margin about 13%. Operating margins of 15%. Return on equity, we're looking at about 17%. And then total return in the last 10 years, including dividends and everything else, this company has returned about 8%. Let's call it about 8.4%. Return on invested capital about 15%. And then revenue growth in the last 5 years has been about 5%. Now, current ratio is above 1, which is really good, because that's what we're normally looking for. And the growth estimate for next year is about 4% for the next year and then going forward. And this is what you expect from this company, as well as the dividends. So you above, 7%, 6%, but and above, okay, which is quite good for this type of business. This is a very old company. The dividends is good. It's sustainable. It's been paying for 60 years. And obviously they grow about 4 or 5% every year, so they're not like a fast-growing companies. And because of the volatility side of things, the beta is quite low. This is one of the companies I like to have in my portfolio to kind of stabilize things, if you like, because you got your high growers, fast growers, as well as your these type of companies. Fair value according to Morningstar is right now about $164 per share. So it's about $6 above that price right now. It's about 4%. Fair value according to Simply Wall Street, we're looking at about 231. Okay, that means 26% are undervalued at the moment, which would be great if that's true. Remember, these companies, they use their own intrinsic value. They look at their cash flow. They predict based on that and what the company will generate for the next 5 to 10 years, and then they come up with the intrinsic value. They're human, they can make mistakes sometimes. Okay, so when the company uses discounted cash flow model, they have to make some sort of estimation, and that could be wrong. So you have to be careful. Okay, that's why you should always not just follow this. You should always have a margin of safety. Margin of safety for this company, I normally use about 5%. Any high growers, 10-15%, whatever you're comfortable. If you think this company is very, very risky, then have a higher margin of safety, meaning 10% off whatever these companies are saying, 15% off what these people are saying. Okay, so if this company is 30% undervalued, 35% undervalued according to your calculation, then maybe that's a good whatever. Okay, so you decide what is good for you, basically. Okay, in terms of tip rank, they're saying it's about $184 per share, which will be great. So that's about 8% upside from where it is. Same goes for Seeking Alpha. These two kind of use same analyst when it comes to predictions, and is a buy rating from Seeking Alpha. Now, J&J is 100% from Sharia side of things. It's absolutely fine. There's no issues, and they are buying back their own shares. Now, couple of issues with this company. So this is kind of financials. When you look at this is nothing. This is type of business I like to own, get my dividends, sleep well at night without having to worry about anything. You get you about 3% dividend, 4-5% growth. you get you 7%. Basically, you are closer to what the markets on average gives us, okay? And that's fine. But one of the things that we really need to worry about is two things, first of all. In fact, first let me talk about the split. So Kenvue is the company they split into. So basically they split the company into two, or spin off if you like. And J&J shareholders, basically investors, can soon swap their shares, okay, of J&J for Kenvue stock. So if you like this company, then you can basically get rid of some of your shares of J&J and get this company. Now, a lot of companies, what they do when they do split, okay, or spin off, they kind of force you and they give you the basically shares of this company as well, okay? So you get you basically extra shares from this company. What J&J is doing is actually different, which is quite nice. So you've got that option basically, but they still haven't made the decision, or they've kind of mentioned it, but they haven't actually given us enough detail to say, okay, this is exactly what's going to happen. But the fact that you can swap is good, but obviously I'm not swapping basically J&J for this company, okay? So this is more like that's basically an option. So, and this is for the consumer health side of their business. So there's a bit more details on this. I'll put this link on the description. You can have a look at this, okay? But they haven't made that decision yet. They haven't actually basically said this is exactly what we're going to do, but they have said this is basically we will give the investors the option to basically get rid of their J&J basically shares and get more shares of Kenvue if you like, okay? Now let's talk about the things that are worrying us, okay? And that's basically the baby powder that this company had years and years ago. Basically, a lot of people have come out and said, you know what, because of because of using it, I've now developed cancer, and there's a lawsuit going on. What the company has done, and what's happened now is, this has been going on for a long time, and the company has actually basically done some sort of what these companies try to do is, once a situation like this happens, they create another company and they basically completely bankrupt that company, and that company takes all the liabilities away from this existing company, and they pay off these people who have basically made the lawsuit and so on. And that's what's been happening. And the company should not be sued while the bankruptcy situation is still ongoing. And the company is proposed to pay almost about $9 billion to settle this situation. But now what's happened is, the person who's actually suing them is actually got a cancer that is deadly and could potentially lose their life before the settlement happens. And for that reason, the judge has now said the J&J has to pay $18 million to this individual, okay? And that's just one individual. The rest of the people, well, basically that's still ongoing. So once the bankruptcy situation settled, the company will pay that $8.9 billion, and that could potentially be paid in installments, so it's not going to hurt the cash flow of this business. This whole situation is very sad because no one wants to be in that situation, obviously, for basically the individuals I'm talking about. And these companies, this is one of the reasons we really have to be careful in the companies that we invest in. And this is why it's very hard as well to invest in individual companies, because anything can happen. 3M is in a very similar situation, and this one is actually way worse than actually what is going on with J&J. So in a nutshell, yes, that's still ongoing. Am I comfortable? Am I actually okay to hold basically this company in my portfolio? Absolutely yes. It seems a little bit overvalued at the moment because of what's happened just the last 24 hours and so on. I'm up about 9% or £383 right now. I really like this company. I want it to be a core holding on my portfolio for the long run. And this lawsuit situation, I'm just going to sit back and watch, see what happens for now. But I'll be honest with you, I don't think, because they were allowed to, because of the lawsuits happening and the company has been basically completely taken off, the risk has now basically they're taken away from J&J. Hopefully that will settle and that will be it, and there will be no more lawsuits. Whereas 3M, we will talk about another day, and where I have talked about it before, there are two different lawsuits going on with this company, and that is the scary one, okay? So that's where I am right now. I feel comfortable. I'm gonna hold on to this company. I probably will be adding to it if it comes down a little bit. And right now it seems basically a little bit expensive. If it drops back to 150s or 160s, whatever, then I might start buying a little bit here and there. So that's my plan, inshallah. I hope that kind of helps and gives you an overview of what's going on. And like I've always said to you guys, you have to be careful of what you're investing in. The reason I sometimes always say to you, do your own research, is because of this type of things that happen in the background. I might see this and say, do you know what, I'm comfortable with it. And you might see and you're like, oh wow, this is crazy. Why have I even, you know what I mean? Don't follow anybody. Just do your own research and learn to actually understand what's going on. I've got a couple of more videos planned in the next couple of days that I'm going to release, inshallah. I want to talk about the general theme of investing and things like that, inshallah, more generic stuff, because it's very important to talk about these individual stocks and so on. But we also always, especially what's happening in the world right now, especially in the UK where things are very, very expensive and getting ridiculously expensive. What are some of the advice that I have or I'm doing, and what are some of the things that I'm doing right now that I can share with you guys? And that's the plan for the next few weeks, inshallah. I'll let you know. Have a wonderful day. Assalamu Alaikum.